Hi, everyone, and welcome. We will go ahead and get started in just a minute or so to give everybody a chance to file in. For those just joining, welcome. We'll just give about 30 more seconds and then we'll go ahead and get started. Okay, it looks like our attendee count has leveled off, so we will go ahead and get started with our presentation. We would just want to thank you all for joining us here today. My name is Annie Hambaugh. I am the Director of Training at Patriot Software, and I'm very excited to announce that Patriot has recently partnered with Vestwell, which is a 401k retirement platform offered to businesses. So we wanted to get together today to address the upcoming deadline that small employers in California with at least 5 employees or more, they have a deadline coming up June 30th at the end of this month to get a retirement plan set up in place. So Christian Romano from Vestwell is here with me today, and he's going to be explaining some of the requirements, giving an overview of the CalSavers retirement savings program, and then also explain how offering a 401k plan instead of the CalSavers IRA is a way to meet that state requirement. So Christian, I will go ahead and hand it off to you.
Awesome. Thank you, Andy. Very much appreciate the introduction. And to the audience, thanks so much for taking a few minutes to chat with us today. We have a very informational presentation ready for you guys, and we'll give you some relevant information as it relates to this upcoming deadline in California for companies with 5 or more employees that Andy mentioned. And in addition to sharing some background on that legislation and why it's relevant to you all, we're also going to provide you with some information as it relates to the Patriot and Vestwell 401k offering and how that satisfies this upcoming mandate, and in many ways is actually more beneficial to the companies and to the employees of these companies for those who choose to move forward with this offering. So to provide some context for you all, the government has expanded legislation in many states. California is a great example of one, to cover and basically enhance the retirement offerings that are available to employees at small businesses. So to provide some context there, when we think about the number of employees that are employed by small businesses in the US, it's nearly 43 million Americans. And the reality is, of these companies where these Americans are employed, almost half don't offer a retirement plan. And obviously that's problematic for a number of reasons. And so what the government has set out to do is incentivize and in some cases force businesses to offer retirement to their employees, and in doing so help employees get better prepared for retirement. So 20, 30, 40 years from now, when it comes time for employees to go ahead and retire, that they're in a position to do so. So before we dive on into some of the important and relevant content, there are a couple terms that you guys are going to hear that we wanted to map out for you and provide some definitions for. So the first is employer-directed auto IRA. This is the type of retirement plan that California has made available to employers to use to stay compliant with the California mandate known as CalSavers. And so this is a more basic retirement offering that employees of companies who offer this program are automatically defaulted into. The 401k plan is what Patriot and Vestwell have come together to offer. And the way to think about the 401k plan is it is still a retirement plan, but it is a more comprehensive offering that I would say more companies in the US use because it is more beneficial to both business owners, to the business itself, as well as employees. Plan sponsor. This is a term that simply refers to the company that is offering or quote unquote sponsoring the 401k plan. So if you hear us refer to a plan sponsor, that just means Joe Schmo's Auto Garage or the name of company who's actually offering the benefit. Auto escalate is another term that you may hear us touch on. Auto escalate just refers to employees who choose to participate in a retirement vehicle. There is a feature that automatically increases or quote unquote escalates their contribution to the 401k plan or other retirement plan vehicle annually. So it's a feature that some of these retirement benefits have. Auto enroll is a similar feature, but auto enroll refers to a structure by which once an employee of your company has reached the required eligibility for a retirement plan. Eligibility is a term that just refers to how long someone has to be at a company to gain access to the retirement benefit. If that company has an auto enroll feature, that simply means that once they've met the relevant eligibility criteria, once the employee has, they automatically start contributing to the retirement plan. And then finally, profit sharing. Profit sharing is a feature that can be included in a retirement plan offering, specifically 401k plans. That is another way for employers to provide money to employees, typically on an annual basis. So now that we have some of those definitions under our belts, let's talk about some of the driving factors and forces behind states like California choosing to implement these mandates and offering auto IRA programs for companies to use to satisfy those mandates. So ultimately, there's a term that some folks in the call may be familiar with or may heard of in the retirement, I would say, landscape or conversation. But what the government is trying to expand through this legislation is they're trying to expand coverage. And so all that means is they want more Americans to have access and to be covered by some sort of retirement plan structure. And one of the best ways for them to do this is by, at the state level, having states mandate companies to offer a benefit to their employees that their employees can then use. So as it relates to, looks like we skipped a slide here. So as it relates to the auto IRA program specifically, which is synonymous with the CalSavers name, this is an IRA program that anyone can open. And it includes an auto enrollment feature, which just means that, as I mentioned earlier, if you are an employee of a company that is offering an auto IRA program, you will automatically start contributing to that plan. And again, the reasoning behind this is to help more Americans prepare for retirement, and in doing so, reduce the burden that may fall to the government to help support folks who reach the retirement age but haven't saved enough money over the course of their professional careers. So let's dive a layer deeper here. So when we think about CalSavers, again, CalSavers is the retirement offering that the state of California has made available to employees, to employers to use to satisfy the CalSavers mandate. So again, at a high level, the state of California has said companies of varying sizes need to offer some sort of retirement benefit to their employees, and if they don't, they're going to be fined for non-compliance. This is overseen by a board and run by the state treasury department in California. The program and the type of retirement plan that CalSavers is an employer-directed IRA program. And as I mentioned, depending on the size of company, over time, the legislation has grown in terms of the number and size of employers that it encompasses. So what we're seeing here, and what's relevant to you all on this call, is on June 30th, the next deadline for CalSavers kicks in, which says that for a company that either employs 5 or more people in California or is based in California and employs 5 or more people, you have to offer some sort of retirement benefit to those employees. And if you don't, you will be penalized at a rate of $250 per employee, growing to $500 per employee, depending on how long you remain non-compliant. So when we think about the CalSavers program, so again, there is a mandate that says you have to offer a retirement plan if you have more than 5 employees or 5 or more employees by the end of June. One of the options that you as employers have to satisfy that mandate is this CalSavers program. So here's some information as to the specific structure of this program. It includes things like auto enroll, which again, as we touched on earlier, means that every employee, once they reach the eligibility for the plan, is going to automatically start contributing to their CalSavers program. There's an auto escalation feature, which just means that once they start contributing every year, the amount they're contributing to the CalSavers program is going to increase by 1%. The default contribution rate is 5%. That just means that if I'm an employee of a company that has, let's call it 6 employees, if that company chooses to leverage the CalSavers retirement program, I'm going to automatically start contributing to that plan at a rate of 5% of my salary. Now, these programs are very simple and basic. And so one of the key differentiators, I would say, that versus 401k versus CalSavers is employers are not able to make contributions to their employees in the CalSavers program. So it's a limitation. Another limitation here is, as an employee, the amount that I can contribute to the CalSavers program, to my employer-directed IRA account, is capped at $6,000. For 401k plans, that number is much higher. And as far as how that money is invested, it can be saved via Roth or pre-tax. So when we think about the CalSavers program, again, this is a retirement vehicle that employers can implement to remain compliant with the California State Retirement Plan mandate. Now, for this program, there are fees to savers, which is a term that's synonymous with the employees at your company who may use it. And those fees range from about 0.83% to 0.95%, depending on the investment election. You can see how that cost is broken down. And so while there isn't a cost to the company per se from a fee perspective, from a hard dollar perspective, employees who use this CalSavers retirement program are going to pay a fee to use that benefit. So here's some more information about the enrollment process. So if you have employees that are 18 years or older and are W-2 wage earners, they are eligible for using this CalSavers retirement program. Employees are automatically enrolled 30 days following the date of eligibility, which in this case is either when the plan gets put in place or when they reach the age of 18. As we mentioned, this is an auto enroll program, which means whether I like it or not, I'm going to be set up with a contribution into the CalSavers program if my employer chooses to implement that retirement vehicle. I can always opt out, but if I do nothing, I will start contributing to that program. And what comes down to it from an enrollment perspective, as far as employers are concerned, they need to register for the CalSavers program and complete the sign-up process. They're going to have to add employee information, so you'll have to upload your company census file. As you hire folks and terminate folks, that'll need to be updated in your CalSavers vehicle. And every time you run payroll, you're going to have to manually submit a payroll file to the CalSavers program, so the right amount of money is being deposited into your participants' CalSavers accounts. Ultimately, that payroll file is used to direct money based on how much in dollars folks want to actually contribute to the benefit. So I would say at a high level, here's some overview information. So as far as the size of the plan, number of employees who have registered for the plan, we touched on the employer size threshold, whereas of June 30th, you are going to have to use some sort of benefit, and CalSavers is an option. Some other high-level information that you may be interested in just understanding the makeup of the CalSavers program. So we know that this deadline and this state mandate exists, and we know that there is this CalSavers program, which is a retirement vehicle that employers can leverage and can offer to their employees to remain compliant with this state mandate. However, Vestwell and Patriot put our heads together to build a solution that is a little bit more comprehensive, that provides both employers and employees a more, I would say, comprehensive benefit that is more beneficial to both those groups, while at the same time allows the employers who choose to implement the Vestwell and Patriot 401k solution to stay compliant with the state mandate. So what we're going to do now is we're going to share with you some information as to the program that we've designed that employers in California can sign up for that will satisfy the California state mandate that is forcing companies with 5 or more employees as of June 30th to implement some sort of retirement plan vehicle. So we went through earlier in the presentation the makeup behind the CalSavers program. We mentioned that it's a more basic retirement plan offering. There are limitations as to how much an individual can contribute themselves. There's limitations as far as the types of contributions that can go into the plan. As an example, employers are not able to make contributions to their employees. There's no profit sharing. When it comes to the investment piece, there's just only a few options that participants can choose from, limited in that sense. Not a lot of flexibility when it comes to designing the benefits. So things like auto enroll are mandatory, auto escalation is mandatory. And then importantly, there's manual work that goes into using the CalSavers program. So as we touched on earlier, part of your job, in addition to signing up for the program initially, is every time payroll is due, you need to download payroll files and upload them to the CalSavers program, so that way the right amount of money is going to be deposited into your participants or your employees' CalSavers accounts. And so with that said, again, Vestwell and Patriot, we put our heads together to design a 401k retirement plan benefit that most importantly satisfies the California state mandate law and keeps you in compliance so you aren't fined, but expands the benefit and really provides you with a more comprehensive alternative to the CalSavers program. So let's go through some of the specific ways that we've designed this offering to make it more beneficial to both employers and employees. So first of all, I would say if you are a business owner and you want to be saving for retirement, oftentimes business owners have more cash flow that they can put into a retirement account. What the 401k solution that we have and that you guys can use and implement and offer to your employees is it allows you as a business owner and your other employees to contribute a lot more money. So you can see on the third line here, the individual contribution limit for someone participating in the CalSavers program is $6,000 a year. When you use this Vestwell and Patriot 401k solution, that number is much higher. Every year, you can contribute $20,500, and you can contribute an additional catch-up contribution of $6,500 if you're over 50. And so that's one example of this benefit being more comprehensive and ultimately more beneficial to both business owners as well as your employees. Another interesting piece here is when you think about the hiring environment today, we know that it's difficult for employers to attract and retain good talent. And one of the ways that we've seen small businesses specifically be able to retain good talent and encourage folks and incentivize folks to come to work for you is to provide company contributions to these employees in the 401k plan. So the way to do that varies. You can contribute or you can match folks and say, hey, listen, if you contribute 3% of your salary, we're going to match that contribution. You can make a contribution every year at the end of the year if there's money left over. Lots of different ways that you can structure it, but ultimately it's a lever that is available in the 401k construct that is not available in the more basic CalSavers program, which again is an employer-directed IRA program. Importantly, contributions made by employees or employers, are tax deductible. So just something that factors into your overall tax picture every year as you think about how best to attract and retain talent and offer a high quality comprehensive benefit, but doing so in a tax conscious and cost conscious manner. The other important piece when it comes to the 401k is that in the program that we've designed, there's a number of different options that participants have to choose from when it comes to investing their assets. So contrast that to CalSavers, limited number of options, only about 5 options that folks can choose from with us and the Vestwell and Patriot combined solution, many more options. And the idea here is by providing more options, but not too many more options, participants are going to be better prepared for retirement in the long term because their allocations will allow them to take better advantage of upside in equity markets and other types of markets. Importantly, again, when we speak about 401k versus an employer-directed IRA program, the 401k is customizable, and so features like auto enrollment are optional. So if you think that an auto enrollment structure for your employees doesn't make a lot of sense for whatever reason, that's not a mandatory feature in 401k, whereas as it is with CalSavers. Auto escalation, another optional feature. Again, the idea is you can build a 401k plan based on the needs of you as a business owner and the needs of your employee demographic, and flexibility, again, is just another advantage of the 401k construct. When it comes to tax benefits, there are benefits on the tax side that employers can take advantage of by offering a 401k plan in ways that you can through CalSavers. And then the payroll integration piece is really important. So as you guys know, Patriot is a really high quality payroll provider. Vestwell is a very high quality 401k provider. Each of us leverage technology in an interesting manner, and it's designed to reduce friction for you guys as the end user. And so one of the ways that we are delivering value through our solution is we've synced up our back ends. And so any payroll information that Vestwell needs for companies that sign up for the 401k plan, we pull that information from Patriot without you at the company having to do any manual work. So you don't have to log into any portals and share data between the two. We pull that information automatically from Patriot on your behalf. The same holds true if you have the 401k plan and one of your employees enrolls in the 401k plan and chooses to contribute, call it 10% of their salary. And then in 6 months from now, they choose to change their contribution rate from 10% to 12%. Instead of you needing to update your payroll system in the Patriot portal to reflect that new deferral rate for that participant, instead we communicate that deferral change directly to Patriot, and Patriot makes an update in their payroll system on your behalf. So there's a lot of friction that can come with retirement benefits, but technology, when leveraged correctly, can automate the manual work that would typically fall on your shoulders, and in doing so, make it much more compelling for you and make it much more, I would say, make it much easier for you to offer the benefit and not have to deal with the same levels of manual work. So This brings us to, I would say, an important point in the presentation in terms of helping describe really what makes the Patriot Vestwell combined offering so relevant and compelling for you all. So again, taking a step back, the reality is because you're based in California, if you have 5 or more employees, you're going to have to do something on the retirement side. We went through the vehicle that is available to you through the state of California, which is an employer-directed IRA program, which again satisfies the mandate, so you will be in compliance, but as I would say, limited and relatively basic in terms of how beneficial the benefit is to both you as a business owner and also to your employees. On our side, on the 401k piece, we've taken a step back and have tried to understand what are the key points and key considerations that we should build this 401k offering around. And so we boiled it down to these 3 items. The first is ease of administration. The integrated payroll piece is a really important way in which you guys as business owners can offer a retirement plan to your employees without taking on the burden of manual work that you would be stuck with through CalSavers or maybe through some other 401k provider that isn't integrated with Patriot. And so again, we're pulling payroll data, sending 401k deferral information back to Patriot without you guys having to do anything. In addition to the integrated payroll piece, the onboarding process is completely digital. So you imagine you're logging into a portal, you're providing us with some basic information on your company, things like company EIN, company address. You're letting us know where money is being pulled from to deposit into participant accounts. All the information is provided to us in a digital manner, which is easier than having to go back and forth over email, etc. Additionally, over the course of the year, as is the case with most retirement vehicles, there are different documents and notices that need to be posted to participant accounts for you guys to keep compliant with the various regulatory structures that govern different retirement plan vehicles. We automate, as an example, the notice delivery process. So any sort of documents as it relates to the 401k plan that need to be provided to your employees, that happens automatically for you. The same holds true with eligibility tracking. So let's say you decide on an eligibility structure for your 401k plan, and you say that you have to work at the company for a full year, and over the course of that year, employees have to work 1,000 hours. Let's just say that you wanted to choose that eligibility structure. Once you decide on that structure, it's Vestwell's responsibility to ingest census information from Patriot and then track eligibility and provide access to the 401k plan for your employees once they meet that eligibility criteria. And that all happens without you having to do anything. So on our side, Vestwell and Patriot, we put our heads together to understand what are some of the friction and pain points that a business owner would typically be stuck with, and let's build tech to make it very easy and really reduce the administrative burden that would typically fall to you to offer a 401k benefit. The second piece is from a liability perspective. So as it relates to 401k, when your employees are choosing investments to use for their assets that they've contributed to the 401k plan, ultimately someone needs to be monitoring those investments, and initially someone needs to pick those investments from a long list of options. And as part of this solution, we are providing a fiduciary service which is responsible for, again, picking the investments that are initially available to your participants in the 401k plan, but also continuing to do diligence on those investments over time. So instead of that responsibility and that fiduciary liability falling to you all, instead we've included another provider who is going to take on that responsibility for you. In addition to the investment piece, there is an administrative fiduciary responsibility, and that covers things like when people become eligible, they need to be able to access the plan. As an example, as I touched on earlier, Vestwell automates that for you. So we track eligibility calculations, and when someone meets the eligibility criteria, we provide them access to the 401k plan benefit. In addition to eligibility tracking, there's various documents that need to be filed with the federal government every year related to the 401k plan. One example of that is the Form 5500. Think about it as a document that summarizes what's happened in the 401k plan over the course of the year. So things like money in, money out, who's taken loans, who's eligible, as part of our offering, instead of that responsibility falling to you guys as business owners to produce that document and file with the federal government, Vestwell actually takes on that responsibility for you. So as part of the year-end process, Vestwell produces that document. We actually sign the document on your company's behalf and then submit it on your behalf. So I would say another example of us building a construct that makes it easy for you guys to offer, but also really reduces the liability that would otherwise fall to your shoulders. Now, the third piece, and last but certainly not least, is it's great if this retirement benefit that's going to keep me compliant with CalSavers is going to be easy to use. That's important. It's great that if I offer this benefit that's going to keep me compliant with this CalSavers program and keep me from getting fined, is going to reduce my liability relative to other options and other retirement vehicles. That's great. But ultimately, if it's going to be costly for you to offer this benefit, it's going to be dead on arrival. So instead, what we've done is again, we've put our heads together with Patriot and have built out a really competitive fee structure that is specific to Patriot clients. So you guys are getting a special discounted rate. Importantly, there are tax credits that are available to you as business owners that further reduce the cost to operate the 401k benefit over time. So let's drill down into that a little deeper. The tax credit piece is very compelling, and I would say generally speaking, the government is we touched on earlier, spending more time and allocating more resources to expanding access to retirement vehicles, and in doing so, helping ensure that more Americans are better prepared at retirement when it comes time when they reach the age of 65 or otherwise. And so the tax credits that are available to a business owner to implement and continue offering a benefit were expanded with what's called the Secure Act, and are actually in the process of potentially being expanded further as a result of some other legislation that has passed the House and is currently with the Senate. But as a business owner, if you choose to implement a 401k benefit, the government is going to give you an annual tax credit for the first 3 years that the 401k plan is in operation of a minimum of $500. Again, that's an annual number, and a maximum credit of $5,000. And so there's a calculation that happens where if you take the number of employees that you have and multiply that number by 250, there's a calc that ultimately determines what the tax credit is. But every year for the first 3 years the plan is in operation, you're going to get a minimum credit of $500 that you can apply to the fees associated with your 401k plan. In addition, if you include a feature like an auto enroll feature, the government is going to provide you with another tax credit on top of the initial tax credit of $500 a year for the first 3 years that feature is in operation. So really important to consider as you factor in the overall cost of the benefit, which we'll touch on here in a second. It's meant to be very competitive already, but it will be further reduced by the tax credits that are available for companies to leverage when implementing the benefit. And for those of you who are interested in seeing the cost specifically to your company to implement the Patriot Vestwell 401k solution, we're happy to share proposals with you. And in addition to the actual cost, map out what your tax credit picture might look like. So back to CalSavers and the upcoming deadline. So as Annie mentioned at the beginning of the presentation, and as I've spoken to earlier, companies who do not or have not started the implementation process for some sort of retirement plan vehicle by June 30th, if they have 5 or more employees, will be fined for non-compliance. Fines kick in initially after 90 days of non-compliance at $250 per employee. And again, we're launching this right now and providing access to it for you all right now. So that way, if you are covered by this deadline, and if you've got 5 or more employees in the state of California and you aren't currently offering a retirement benefit today, the solution we've come up with is tailored to your needs, is priced correctly, And importantly, from a compliance perspective, is going to keep you in compliant with this California legislation that, again, kicks in at the end of June. So now let's go through the way in which we've structured the 401k plan pricing and product. So what we know is when we're working with small businesses, the needs of those small businesses vary. So some companies come to us and say, listen, Christian or Vestwell, I need a 401k plan because CalSavers is coming up. I don't currently offer a retirement plan vehicle today. I don't want to use the CalSavers program. I'd rather use this private option that integrates with my payroll, but I really don't need anything too complex. And so from a design perspective, I don't need something that is tailored to the specific needs of my employee base. I only have a few employees. I don't plan to hire that many folks. So I just need something simpler, but I really like the automation piece. I really like the price point, and I really like the fact that you guys are reducing my liability. And so in that scenario, the basic product that we've built with Patriot is a really compelling option. So the cost of the company in that instance in year one is $50 a month. And then there are additional fees that would be paid by the plan participants to use the benefit. And then there's a one-time fee to the business to initially set up that plan. Again, it's really important to remember that while these fees exist, there are tax credits that can significantly reduce the cost to business owners and businesses to implement the benefit. But again, if you're a company that says, listen, I need something very simple, but I need it to satisfy the California state mandate, the basic option is a really good option for you. If you are a business that maybe has 20 or 25 employees and you say, listen, I am either already offering a 401k plan benefit, but I'd like to move the 401k plan to this Patriot Vestwell solution because I really want to take advantage of the payroll integration. Or maybe you're putting a 401k plan in place for the first time, but you would rather have something that's a little bit tailored to your employee demographic. Maybe you want to build a design that is more bespoke to what your needs are as a business. In that instance, the full service program is a great option for you. It's going to cost you a little bit more money as a business because we're building something that is tailored to what your needs are. But the tax credits still apply. It's still very cost competitive. And again, is what we find works best for companies that are looking for a little bit more customization as it relates to their retirement benefit package. The final option is the solo pay option. So if you are a sole proprietor, if you are the only employee at your business, but you want to have a retirement plan in place so that way you can save for retirement, we also have the solo pay offering, which is perfect for you. There's flexibility there. There's higher contribution limits, as we discussed earlier, as it relates relative to things like CalSavers. But it's another, I would say, product and type of 401k that we have put our heads together with Patriot to design and offer to employees. Importantly, the $50 a month base fee is a promotional price, so that will increase after your first year with Vestwell and Patriot. But again, we put our heads together to design something that is very price competitive and fits the needs of businesses that are typical to Patriot. So with that said, what we'd like to do is open it up for some questions. We understand that whether it be CalSavers or 401k or all these topics are newer, we certainly want to give folks on the line the ability to ask us some questions and make sure that you come away with us with a really good understanding as to the upcoming deadline. It's about 2 weeks away, and how the Patriot Vestwell solution is designed to meet the needs of small businesses as it relates to that deadline, but also go above and beyond what other retirement vehicles may be available to you all to really enhance your ability to attract and retain employees, to enhance your ability as business owners to save for retirement, and do so in a very thoughtful way that doesn't require work on your end, given the automation we've built into the program. So I'll pause there and let's open it up for some questions.
Everyone, feel free to write in any questions you may have. Christian, we have a good one to start that you touched on. What happens if we've already signed up for CalSavers?
Yeah, so if you already signed up for CalSavers, you don't have to proceed. It's not like you're locked into that program. If you sign up for CalSavers, but you'd like to use this Patriot 401k, Patriot Vestwell 401k solution, you can simply sign up with us. You can stop the sign up process for CalSavers and stop contributing to that program and use our solution. So really easy there, nothing to be concerned about. Just let us know and we'll get you started in the 401k setup.
And we have another one here. How long does it take to set up a plan?
That's a great question. So there are a couple different requirements as it relates to 401k plan setup. And before I dive on in, for everyone's reference, what we found is states that have mandates like this CalSavers program, what they care most about is let's just say July 1st comes around and you don't have a 401k plan in place yet, but you have signed an agreement to start the onboarding process with the Patriot Vestwell solution, then you've essentially satisfied that deadline. Like what California wants folks to do by June 30th is start the setup process and start the implementation process in some form or fashion, and in doing so, you remain compliant. Ultimately, though, when it comes to from when you agree to move forward with a 401k plan to when you are making company contributions, if it's a plan that you're putting in place for the first time, meaning you don't already have a 401k plan benefit, this is your first 401k plan, we call them a startup 401k plans, it takes a minimum of about 45 days, typically around 60 days. And the reason why it takes a little bit longer is there's some information we need from the business to set up the foundation of the 401k plan on our end. We then decide on the plan design, so deciding on things like what the eligibility is going to be, are there going to be any company contributions, things like that. Once those decisions have been made, we then need to provide your employees with access to the benefit. And before contributions can start going into the plan, there's a 30-day window that they need access to the benefit. So if you back into it, it takes us about a week or two to get the plan in place and decide on plan design. And then there's a 30-day window where we have to wait to, number one, prevent contributions from going into the plan, but give employees that 30-day window to enroll in the plan, choose how they want their money to be invested, choose how much they want to contribute to the 401k plan. So again, startup plans, so plans that are being put in place for the first time, takes a minimum of about 45 days, typically around 60 days. If you already have a 401k plan and you want to move that plan from some other provider to the integrated Patriot Vestwell solution, that takes a little bit longer, about 60 to 90 days, because we have to coordinate with the prior provider to move all the assets over. So it takes a little bit of time, but I would say the process we've designed is very smooth, it's very digital, and there's not a lot of work that's going to fall to your shoulders to launch the benefit.
Okay, next question we have, who determines the eligibility requirements, i.e. part-time versus full-time?
That's a great question. So there's a term that I've used here called plan design. And plan design is a point in the onboarding process where you as a business owner are connecting with your Vestwell onboarding implementation manager. And you guys will go through plan design. And so you can design the plan in a variety of ways. We touched on how you can choose varying levels of company contributions. You can choose, to this question specifically, who you want to have access to the plan and who you want to be eligible for the plan. Technically, you can't exclude specifically part-time employees, but you can set up an eligibility structure where to be able to access the benefit, you need to have been employed for a full year, and over the course of that year, you would need to have worked 1,000 hours. And in doing so, in most cases, that excludes part-time employees. So again, as part of the onboarding process, we will have a conversation around plan design with you to decide on things like eligibility and other elements of plan design to make sure that you're comfortable with the design and that it's tailored to the needs specific to your company.
Okay, we have another good question that came in. If we choose Vestwell, how many employees have to opt in?
So the answer is none. It's a benefit that folks can choose to use or choose not to use. Ultimately, by offering it, you're satisfying this mandate that's coming up as of the end of June. But it's not mandatory that folks need to use the benefit. You just need to prove that you're offering it.
And for CalSavers, who pays the fees, employer or saver?
So when we think about fees specifically, there are fees to the employee, not to the employer. But I think as everybody in this call, I would say would agree with, when you think about the cost to offer a benefit to your employees, it's not just about the fee piece. It's also about the soft dollar cost of, okay, what's the setup process like? When it comes to running payroll, if you're using a state plan where you are having to manually download and upload payroll files and do that every time payroll is due, and having to make sure that the files are formatted correctly so they can be ingested easily into, in this case, the CalSavers interface, that also adds costs and time and takes time away from other revenue generating activities. So, well, technically there's no fees paid by the employer in CalSavers. There is a cost to use the benefit, which comes down to the manual work that we've chosen to automate through our tech-forward solution.
And regarding the annual asset-based fee, what is the percentage of, or how is that based? That 0.6% is of what?
Yeah, so that is just based off of the assets an employee has in their account. You can see relative to CalSavers and that specific fee, it's less than what the cost is through CalSavers, but it's just based off the assets that a participant has in their account.
Another one we have here is the Vestwell 401k program only available to Patriot users?
So it's available to all, so I would say take a step back. Vestwell is a 401k provider. And this is an offering that is specific to Patriot clients. So Patriot clients get special pricing. The payroll integration piece, there are other providers that exist out there, but again, for today's conversation, all of the benefits of this offering are specific to Patriot clients.
And next we have, what type of increase can we expect after the first year?
So I assume this is related to fees.
Yes, regarding the fee for the basic plan and the solo K after the promotion.
Sure. So again, the first year, the cost to the company is $50 a month in those two products, and it increases to $80 beyond that. Again, the tax credit piece is very, very compelling. And as we mentioned, you're getting a minimum of $500 annually that can be applied to the fees paid from the company. And that's capped at $5,000. There's a calculation that occurs that we can help with when we run proposals to give you guys a sense of, okay, here's the cost and here's a tax credit that you can reasonably expect. That way, yeah, have a full picture of what the actual net cost to the business is to offer the benefit.
Next question, we have over 5 employees total, but only 4 full-time in California. Do we still need to set up a plan?
So my understanding is yes, through CalSavers you do.
And for the investment fiduciary services, does Vestwell provide investment advisors to manage accounts or only custodian?
Yeah, so one of the unique features to Vestwell is we do have a number of financial advisors who choose to put their clients' 401k plans on the Vestwell platform. So if there were a Patriot client who wanted the service of an investment advisor to provide hands-on advice or education to your employees, we can absolutely connect you with one of the many advisors that we work with. And we do that based on geography.
And next we have, if we start with your plan, do we need to advise CalSavers that we have a plan?
So by offering the 401k plan through this Patriot Vestwell solution, you are compliant with CalSavers. There may be documentation that you have to show to prove that you are offering this benefit, but I would say the takeaway is if you use this Patriot Vestwell solution, this is one of the ways in which you can satisfy the CalSavers requirement.
And we have someone asking if we'll have a recording replay. Yes, we will have a recording that will be shared. Okay, sole proprietor with an S Corp. Do I have more room for write-offs than just maxing out my individual IRA? I'm assuming there's a max for the individual that is tax-free, and then the company can write off its match. What is the max for this versus the individual IRA?
Yeah, so this is a great question. It has some complexity to it. I would say we'd love to hop on the phone with you and walk you through it at a more granular level, but I'm moving back a few slides here. I think the point that you should hone in on is 401k plans for sole proprietors are compelling because it allows you to contribute much more money annually. And we all know that, so we all know what the effect of compound interest is. And so the reason why we see sole proprietors choose to use a 401k plan relative to an IRA program of some sort is because you're able to contribute a bunch more money. There's employer contribution that can be made on top of that. So lots of different ways that you can structure things, but ultimately, if you want to contribute more money, the 401k route is a much better option than some sort of IRA route.
Okay, is the eligibility the same for CalSavers and as Vestwell?
No, so that's one of the, I would say, features of 401k relative to IRA programs is again, I'm using the term plan design. When you're setting up a 401k plan, you can go through the steps of designing the plan based on what the needs of your company are. And so from an eligibility perspective, we touched on the example of part-time employees earlier. If you want to offer the benefit to your full-time employees, but you have some part-time employees who are maybe seasonal that you don't want to offer the benefit to, you can structure eligibility in such a way where it's available to the full-time employees, but not available to the part-time employees. There is considerably less flexibility when you go the employer-directed IRA route, which is the program that is run by the state of California that's available for folks to stay compliant with CalSavers.
Okay, we have, so I have 8 employees. I believe that all will opt out except for maybe one. Patriot will deduct on paper from what I understand, then I will have to send the amount to CalSavers, is that correct? And then will CalSavers provide all notices / documentation to any participants?
So I would say high level answer to your question is you have the structure right. You would need to provide access to all of your employees to the CalSavers program, and they would all automatically get set up and start contributing to that program unless they choose to manually opt out of the program. And then every time payroll is due, you're going to have to download a payroll file and upload it to the CalSavers program. Those elements of CalSavers are automated through the Vestwell and Patriot solution.
Next one is, we are an LLC with 4 partners and we employ 4 to 5 regular employees. Do partners need an IRA under the new law too?
So based on your company, just from a pure numbers perspective, it sounds like you have more than 5 employees, so you have to do something. CalSavers is an option, and the Patriot and Vestwell solution, which is a private option that again is high quality and that automates the work for you, is another option. So it just sounds like based off the numbers here that you're going to have to do something, and you have 2 options.
Okay, and we have one more. I think we referenced 5% somewhere, but the question is that 5% of their gross income or net, and does it come out of each paycheck? That may have been from an earlier slide.
Yeah, so it sounds like a 5% contribution number into the IRA. That would be per pay period. So if you choose to implement CalSavers and you give your employees access and they don't do anything, they're going to automatically start contributing 5% of their paycheck per paycheck into the program.
Okay, I think that's everything we had. We'll be happy to answer any other questions that you all may have as they come up over the next couple days, but I'll hand it over to Christian and Annie.
Okay.
Thanks, Bernadette.
Thank you so much. I want to thank Christian and all of our friends at Vestwell for this very educational presentation. Hopefully you feel like you are equipped with some options and some things to consider. If you have any further questions, feel free to reach out to patriot@vestwell.com. And Patriot will also have a link where you can find out more information on a website. Thank you all. Have a great rest of your afternoon.